Hey, what's up? Today's January 7th, 2021. We're going to be taking a look at the Tesla stock today, and we're going to be doing an analysis of it on the fundamentals and the technicals. So let's get started. So we're going to look at the quarterly fundamentals of the Tesla stock. So if we look at quarter 3 2020, especially in a growth stock like Tesla, you want to compare that same quarter to this. You want to compare that quarter to the same one of the year before. So Q3 2020 compared to Q3 2019. So in terms of revenue, Tesla made $6.3 billion in the Q3 2019, and they made about $9 billion in the current quarter 3 2020. So we have an almost 50% increase. It was probably 40%, but 40 to 50% increase in the amount of revenue that they're making quarterly. Interestingly, the amount of profit that they made, gross profit, was 1.2 billion to 2.06 billion. They're almost doubling their profit. Interestingly, this line item is something that's always interesting to me in a growth stock, the research and development line item. This is something that Warren Buffett likes to look at in regards to whether a company has a long-term competitive advantage. So what we're observing on the research and development line item, looking at 334 million back in Q3 2019 versus 366 million in Q3 2020, we're seeing that number has remained the same at the same level. So you're seeing that Tesla's not making huge increases in research and development. That's a good thing because they're making more money without investing into without increasing their investment into new technologies. So a line item that we definitely care about is we want to look at the expenses as a whole. So I see the revenue, I see the profit. I'm looking for the expense total line item. So research and development, selling, so it's actually not giving me everything. So interestingly, the selling general admin expenses total, it went up from 600 million back in Q3 2019 to 888 million. So they went from about 600 to 900 million. So that has gone up almost in lockstep with the revenue increase. That's not something that's definitely something you don't want to see. You want to see that the expense line item is staying linearly compared to increased revenue. But in general, the fact that they're profiting more per quarter when you look at the net income after taxes, 150 million to 369 million, I think that makes up for the fact that the research and development costs have remained pretty much linear. They're spending more investments on actually selling their product. The fact that they're making almost double the money, I think that accounts for that. So let's look at the annual increase in regards to revenue and profit to make sure that that Tesla as a whole is showing sustainability in terms of being able to sustain its increased revenue. So over the course of the past 5 or 6 years, we're seeing a steady increase in the revenue that they made per year. Back in 2014, they made $3 billion, up to $4 billion in 2015. This is clearly a linear increase in billions per year. Same thing with the profit every year. They went from $881 million in profit in 2014, apparently. So profit. We don't really care about profit as much. We care about that final line item, the net income. But we know that they weren't making money for a long time. But if we look at the Tesla, when the stock started spiking up, that's when they've had essentially their first profitable quarter. So Q3 2018, they made 0.36 earnings per share. I'd love to look at the anybody who's watching this, I would encourage you to look at the earnings report. What's that? The Q10 is what that's called. Let me look at the documents. Whatever the quarterly report's called. Yeah, the 10Q. I would look at the 10Q of Q3 2018, Q4 2018, and Q1 2019. I would try and understand why they went from their first profitable quarter and they ended up dropping down to negative 0.8 earnings per share. And then they spiked it back up. And this is what this Q3 2019 earnings increase back to its previous 0.16. That's what drove the spike in price. So what I like seeing about Tesla is that the spike in price is driven by fundamental factors. We're seeing that they started making money, and they started actually generating earnings, and we saw that that investors started spiking how much money that they were investing in it. What's great about Tesla is that when we're talking about electric vehicles, Massachusetts recently passed laws that they were going to require electric vehicles by 2035. This was a big, I think this is news that came out yesterday. Yeah, so essentially, I'm evaluating this according to the CAN SLIM method. So we've gone through current earnings, we've gone through annual earnings. We're looking for the N. N stands for you want something that's going to be a new technology. So clearly, with the electric vehicles, Tesla's the leader in the space. So that actually stands for L in CAN SLIM. The L, they are the leader in electric vehicles. They literally, as of today, just became more valuable than Facebook. So I stands for institutional sponsorship. So if we go to finviz.com, we look at Tesla, we look at institutional sponsorship. So institutions are like hedge funds, anybody who is investing a serious millions and billions of dollars into the stock. So the insiders are, they own 42% of Tesla stock. So this is pretty good in the sense that there's still a lot of room for hedge funds to invest in Tesla. That's good because when hedge funds and people with a lot of money take positions in stocks like these, they actually move the price upwards. The vast majority of stock market value, 70 to 80%, has to do with hedge funds moving prices. People like you and me, retail investors, we have very little effect on stock prices compared to the institutions. So with that being said, M stands for market direction. Is it in a long-term uptrend? It's clearly in a long-term uptrend. So with that being said, the fundamentals of Tesla are very strong in the sense that they are making more money per quarter. But now we're going to go a little bit into the negative direction, in the sense that the price to earnings ratio is something that I've actually never even seen before. It's 1,600. This is I can't express how astronomical this price is. How much it's worth versus how much they make. I clearly understand that investors are pricing in the electric vehicle market in the years to come, driverless vehicles. Tesla's clearly an innovator in that space, but this is an insane valuation. With that being said, I'm also seeing, so in the positive direction, very few people are taking bets to short Tesla stock. We only see 6% of the float being in the direction to point down to sell. So nobody is confident enough to take a heavy short position in Tesla. But here's where, if I was a Tesla stock owner, I would be looking to make a reasonable exit. So if I'm very bullish on Tesla long term, but in terms of its stock price, I do think it's overvalued, and here's why. It has nothing to do with any theoretical number. It has to do with what do I see the hedge funds and the insiders doing. The hedge funds, the insiders right here, this line item, negative 35%. Over the course of the last quarter, insiders, people who actually know what's going on in that company. And what's interesting about the stock market is anybody who's an insider of a company, like a C-level executive, and they own stock, they actually have to report to the SEC when they buy and sell stock. So we've seen a 35% drop in the ownership of insider shares. We're also seeing that hedge funds, institutional transactions, they've essentially reduced their position size by 12% over the course of the past 3 months. So what that tells me is the dumb money is buying, but who's selling them shares? The smart money is getting out. People who are in Tesla, and we can actually look at all the insider transactions. Literally, it's almost all red. All the insiders, director, chief financial officer. This is a deeply red flag. We have the CFO. This is a very important person in any company. Pretty much, there's been selling. All the insiders have been selling for the past year and a half because they have determined, even post stock split. So we see the stock price was $16.77, and then we see the stock split happen, and they've been selling all the way on the way up. So we see institutions getting out, we see insiders getting out. So I think at this point, the fundamentals, long term, Tesla's a great bet. Short term, I think that this thing's going to have a serious correction. So I think we have to go into technical trading to determine how to sell this thing. So if I were a Tesla stock owner, and I am not a Tesla stock owner, I've seen that the price channel that it's been, I've mapped this out, this price channel, and it's got a nice 45, 50, 60 degree angle of uptrend. Every time I've seen a stock spike out of its price channel in the upward direction, that's usually the beginning. This is me being bearish, so relax, any Tesla guys. I'm a big fan of Tesla, but we're just looking at this technically. Every time I've seen a stock break out of its upward, a very healthy upward trend into euphoric territory, that's where we're at. This is the weekly chart, by the way. All these candlesticks are 7 or 5 days of stock market trading. So it's hard to hide on a chart like this, especially with a stock like Tesla with so much volume. If I were to trade this, I would be having a trailing stop of, at the end of every week, I would have a sell order. So say at the end of this week, November 23rd, 2020, I'd have a trailing stop at $503. And I would just, at the end of every week, I wouldn't even look at it in the week. I would just change my trailing stop and then increase it to the bottom of the previous week's candle. So this is Thursday, January 7th, 2021. I would have a sell order for all my shares at $719. And I would just ride the euphoria up as high as it can go. And I would just ride it up. But essentially, I think that Tesla is definitely overvalued at this time. I think a correction would be healthy for the stock, because you see the insiders are selling, you see that the hedge funds are selling, but the stock price is still going up. We also see a downward trend in volume. So look at this volume right here. Over the course of the past year, we have a decrease in volume, but an increase in stock. So we have a divergence of the price is going up, but the amount of volume, the amount of shares that are being traded are going down. So that tells me that the smart money, we clearly see on the numbers, there's this guy laughing outside, but we clearly see that insiders are getting out, hedge funds are getting out, we have reduced volume. Correction is coming, but you also want to get as much value as you can from euphoric retail investors. So I would just have a trailing stop on the weekly chart. And like right now, I would have a sell order for all my shares at $720, and I would just ride this euphoria as high as it can go. That's what I do, guys.